Hello and welcome back to another episode of The Mortgage Musketeer, where today we're going to be talking about how to close your loan in 10 days. All right, so now this goes into several factors, and the less complicated your file, obviously, the easier this is. So in general, a loan is very simple because it's really just about income, assets, how much money you have in the bank or liquid assets somewhere, and some third-party elements that deal with appraisal and title and homeowners insurance. So if you can set the conditions properly, all this can go very quickly because most lenders these days are underwriting in 24 to 48 hours. Now, if that doesn't happen, you need a different lender. Okay, sometimes banks are a lot slower, just depends. But in general, especially if you're dealing with brokers, you're going to be moving very fast. But what happens in the loan process is it gets hung up. And most of the hangups have to do with either the appraisal, the title, or the buyers who are not giving the appropriate documentation. Now, let me work backwards and start with the buyers. One of the biggest things that we have an issue with buyers is you don't understand that the documents that you provide to your loan officer are your lending resume. Because as a loan officer, I'm talking to the buyer, the client, and I know everything about them. I pulled in credit. I understand what's going on in their life. I know a lot. But when we submit this loan to underwriting, the underwriter doesn't know all of that. All they have to go off of is the documentation that is submitted to the loan officer by the buyer. So when we ask for a pay stub, when we ask for W-2s, when we ask for bank statements, it is imperative that you give good, clean copies. I get the gamut out there. Everything from like folded up, crumpled, like horrible documentation, a picture with a thumb in it, can't read, blurry, pictures of a screen. No, that doesn't work. And understand that no lender will accept a screenshot ever. So if you're used to your mobile phone and that's where everything comes from, you need to figure out either how to get access on a desktop, a laptop, or some other thing that can actually pull up your documentation that you can print and then print to PDF. You want to PDF your documents if possible. Now there are some programs that allow you to take a picture with your phone and turn it into a PDF. Things like Cam Scanner, like Camera, and a few others. You can Google them. Okay, and then you take a picture and it converts it to a PDF. That still means that you have to have a good, clean picture, everything, nothing cut off, right? You can't cut off anything because then it's not acceptable because all these documentation goes into a permanent file that after you close, then goes out and it can be audited. So the underwriters are looking for good, clean documents. If your loan officer asks you for a document and you give them, well, maybe this will work, you're killing yourself. You're slowing the process down. So many times we ask for, I always give this example, we ask for an apple, they give me an orange. I'm like, well, it's a fruit, appreciate it, but I really need this apple. And then they give me a banana. I'm like, where did this come from? And then at some point in time, they finally give me a half-eaten apple, right? Give me clean documentation. Bank statements are one of the hardest things to do because every single bank has different software, so it's not like a cookie cutter, here's your instructions. Your bank determines how they have the format, how easy they are to deal with on the computer, or do you have to go in person to the bank? And if you're in person in the bank, how is their software there? What documentation can they print? It's the hardest thing to do. And the other piece to that is the fact that people move their money all over the place or have big deposits. So the assets are the biggest piece that you have to worry about. The other thing that we run into is your pay stubs. So people who are hourly rarely work a full 40 hours a week. Although they'll pre-qualify off of 40, we need the the pay stubs to show that you actually work 40 hours a week. And if you work more, that's fantastic. But in general, anecdotally, I see that because you're working an hourly wage, people say, hey, anybody want to get off early? And everybody jumps to leave early. Well, at that point, if you do that enough times, your income becomes variable. And then we need written verifications of employment. That can slow it down. Especially with the FHA loans. Pretty much most of those are requiring written verifications of employment. So have your HR or somebody that can do a written verification of employment handy so that we can actually get that quickly. That slows things down as well. Ideally, all of that is done before you find a contract. That should be a good pre-approval. So if you have all of these things in line, you have really clean documentation, and your loan officer said, hey, we got what we need, then it's just a matter of submitting those and having the underwriter look at them and clear them. If you are salary, you have money in the bank, and you actually provide the right documentation, that piece is super, super smooth. The next piece is the appraisal. So depending on where your house that you're buying is located, this can go very fast or it can actually take some time. If it's extremely rural, that will slow things down because they're probably going to try and get some other appraisals in the area because they don't want to lose all that time as an appraiser driving out to one and coming back. Some appraisers are better than others. Some are super slow. Sometimes it's the luck of the draw. But that is a factor. The title company, not all title companies are the same. I just dealt with a title company that we absolutely struggled with. There are title companies that we build relationships with, that your realtors build relationships with. And the main reason is because they know that they handle a process smoothly. Because at the end of the day, they're the ones that are closing everything. And they have to do the title research and they have to get everything together and they have to get it back in a timely manner. There are some title companies that I absolutely adore. I think they're amazing, but they're slower than pond water. And that just does not work when you're trying to move loans through the pipeline quickly. So title companies need to be fast, smooth, efficient, and communicate. Okay. And then last but not least, your homeowner's insurance. If you're waiting forever to find your homeowner's insurance, or you can't decide, or you want to change it up all the time, that is a factor. If the person who's doing your homeowner's insurance isn't quick, because not all of them are the same. Like, I'm not going to get on a bandwagon about homeowner's insurance, but some are absolute pure deep poop. Right? They're horrible to deal with. So if they're horrible to deal with up front, how do you think your claim is going to go? Food for thought. If they are fast and smooth, that means ideally their entire process, even if something happens, would be fast and smooth as well. Your loan officer often has people that they know, like, and trust. I will often get a complimentary quote that you do not have to use. You can use anybody that you want, but it does help speed up the process if the quote comes in good and if everything seems okay. So if you want to use your own homeowner insurance, it's perfectly fine. Do it quickly. Do it right away. If your homeowner insurance requires you to get an appraisal in order to complete it, it's going to slow things down. Okay, so all of that helps things go quickly. So ideally, if you have all the documentation up front, you get a contract, you can get the initial loan documents out, sign the same day, turn right around and submit everything to underwriting same day. It can get underwritten by the next day. You have actual results that are in your hand and you're only 2 days in, okay, or less. I've had them done in 1 day. And then what happens from there is we're ordering title, we're ordering appraisal, and then we're looking for homeowner's insurance. That's where the time actually starts to click because all those have to go back into underwriting. All right. So until we have those, that next round of underwriting, let's say it goes into underwriting and they condition. They say you're approved with conditions and it comes out with, hey, I need another pay stub or I need a written verification of employment, whatever the case may be. Even when those come back, oftentimes we can't submit them until we get title back or appraisal. The closing disclosure is the final piece. So every single lender or investor is a little bit different on how they interpret the TRID guidelines, and that's the fact that you have to sign the closing disclosure 3 days prior to closing. You cannot get around it. Okay, non-negotiable. So what triggers that closing disclosure going out varies from lender to lender. Oftentimes we just try and get it out quickly, which means that we are absolutely making up a closing date, right? So ignore that piece, but it allows the CD to go out so that you can acknowledge that you've seen it so that we can start that 3-day TRID clock. If all of that goes quickly, then we're just waiting on the appraisal to come in. If the appraisal comes in and it's good and gets cleared, and title comes in and it's good and gets cleared, all that comes in and it's quick, you can close technically a loan in 7 days. All right, 10 days is pretty fast. Okay, on average, loans take about 21 to 30 days if everybody is doing what they need to do. Now, if there's anything that goes sideways, if there's liens, if the buyer doesn't have all their assets that are in the bank account, if you're waiting to save up money, if you're getting gift funds and you're dealing with that, there's a myriad of reasons. If I have one where the buyers just don't sign. It's like text, call, email, text, call, nothing. And then like a week later they pop up, yeah, we're excited. Absolutely ridiculous. They're killing themselves. Gonna bust the rate lock, gonna have to extend the lock. And that has to do with the individual buyer. And you never know until you get into the process as to what kind of people they are. So these things are things to consider, but a loan can move really quick. So here's what you need to think about. A loan process is like hot potato. If I get conditions, I don't want them, I'm going to give them to the buyer. And the buyer should be like, I don't want these. Here's the documents that you asked for. I don't want them. And then it comes back to me and I'm like, well, I don't want them again. Let me get it to underwriting. All right. And then underwriting wants to underwrite it as quickly as possible because they want to move their loans along. And that's the idea. So if you can get whatever's asked for in a very timely manner, then the only thing that can slow the loan down is the appraisal and the title. Okay? Hope this helps. This will expedite your loan. This will make it go quickly. This will make it go seamless. And if you have any questions at all, leave comments below. And it's all for one and one for all.